Tesla stock at the time of recording this video is down about 2.5% today. And Elon Musk has a pretty ominous message about other automakers. First off, let's start here. Sawyer Merritt reports that two unnamed Nissan executives said the company has 12 to 14 months to survive. Nissan cut more than 10,000 jobs earlier this month, while simultaneously slashing production by nearly 20%. Nissan's operating profit dropped 85% in Q3. Elon Musk shares this post to his X account and says many car companies won't make it. In fact, in the early 1900s, at the onset of the auto revolution, there was hundreds of car companies. Today, there's less than two handfuls that are successfully operating in the US. Now, I don't know if I want to blame Tesla's 2.5% decline on just this, but it doesn't sound good. And we've seen this time and time again. When one automaker has issues, markets kind of jump to conclusions that they're all having issues. And even though Tesla has already went through its corrective phase of its business over the last couple of years and seems to be on more solid footing towards growth, it's not going to stop some Wall Streeters, call them Wall Streeters, from getting a little nervous or taking this opportunity to short or sell Tesla. So while this is surely not the only reason why Tesla is down today, I'll tell you with certainty it's not helping. Now, to the contrary, we actually have good news for Tesla stock investors. And it has to do with Tesla's new Shanghai megafactory, which will double the company's megapack production capacity. It is on track to complete construction in the next few weeks. You would think Wall Street would be excited about this, and I think eventually we will be, but this news is going largely overlooked today. John over here on X says, WTF is this? Rivian loses $40,000 for every vehicle it sells, and Biden just gave them $6.6 billion. Elon Musk says they should at least be required to get a positive gross margin with existing models before being given billions for future models. It is being reported that Tesla plans to offer battery armor and rock sliders to be available for the Cybertruck as a retrofit option by the end of this year. Also, if you plan to drive into fences, probably best not to remove the front bumper and aluminum skid plate that come on stock. And this is really what Wes is talking about. This will just allow more off-roading of the Cybertruck. Some of today's selling of the automakers, Tesla in this case, in which we cover here on this channel, could be down to this. Trump's plan to slap a 25% tax on all imports from Mexico would affect pretty much all automakers, including Tesla, but especially legacy car makers. Every Tesla sold in America is built in America, but GM, for an example, makes a lot of ICE car and EVs in Mexico. General Motors would by far be the most impacted, and this did cause GM stock to fall quite a bit yesterday. GM stock actually fell about 9% yesterday, whereas Tesla was only down 0.1%, and now you're down 2%, so it could have been some delayed reaction to this tariff news. Even though it really doesn't affect Tesla much, it's still one of those causes for concern that investors will pull out of thin air, even though it's really not a cause for concern. Wall Street is about as nervous as you can be when it comes to uncertainty. Rivian CEO RJ Scaringe says the Tesla Model Y is still the best EV under $50,000. Police department in the Czech Republic has added a new Tesla Model Y to their fleet. Lamborghini employees react to the first road-legal Cybertruck in the UK. They were asked, how much better in real life is it? He said, 100x better. Until you've seen the car, stop talking. I absolutely love this. It's the best car ever. I shouldn't say that when I work for Lamborghini. Now, the news that we covered yesterday that I think was also largely overlooked that will come back and be a positive for Tesla was news that Trump could push to eliminate restrictions to fast-track robotaxis and self-driving vehicles. I mean, 2025 is all going to be about robotaxis and the next big technology with AI, which is self-driving vehicles, in which the only investable way to really play this at scale is Tesla. That's the gold standard of investing in autonomous vehicles or robotaxi. You can also invest in Waymo if you are a large fund manager, okay? If you have access to that. But 95% of investors do not. So that's really going to put a positive spotlight on Tesla coming next year. And I really do think 2025 is all going to be about applying AI. It's going to be software names that apply AI. It's going to be real world AI appliers like Tesla that are actually shaking up an existing, industry or really excelling an existing industry, which is exactly what Tesla is doing. Tesla is adding a charge port heating option to some of their newer vehicles. And it looks like yet again today, the Tesla Cybercab was seen testing around the Giga Texas factory. Elon Musk has retweeted a post saying him and Trump are basically best friends. And you still don't think Trump is positive for Tesla? Yeah. People need to really reevaluate their expectations if they think Trump's not going to be positive for Tesla. Tesla has also scored #1 in customer satisfaction in China. And take a listen to what Dan Ives just said. He says Gavin Newsom started a Game of Thrones battle with Elon Musk and Tesla. Take a listen.
Turning to Tesla, California Governor Gavin Newsom excluding Elon Musk company from a proposal that would offer EV rebates to buyers if a federal subsidy is repealed. Newsom's office telling Bloomberg it's due to the plan's market share limitations. Musk calling the proposal insane in a post on X. Dan Ives of Wedbush saying this: with the majority of EVs sold in California being Teslas, this would be a risky political move in our view. Dan joins us for more. Dan, good morning.
Great to be here.
Do you agree it's insane?
Look, you had Jake Paul and Tyson. Now you got Newsom and Musk. I mean, this is going to be a battle, right? And ultimately, it's a political battle. But the only EVs that are made in California are Teslas. So if they actually go down this path, I believe this could be some threats where more and more jobs move from Fremont to
Texas.
Austin. But at the end of the day, federal tax, as we've talked about, that's going to get ripped away. That's bullish for Tesla. You're going to see this back and forth.
Before we get into that, let's just dig into this relationship. What is behind it? We know what was behind it with Biden. What this basically came down to was union workers not being at Tesla in the way that they were at GM and Ford. What's this one about?
Look, I think, first off, Musk was iced out of the Biden administration for years, right? It was really focused on Detroit in terms of GM, Ford, and others. If you look here, is that there's a beef clearly between Musk and Newsom. But essentially what this is really about is that you are going to have these tax credits from a federal perspective taken away. California clearly trying to do something to stop that. But the reality is that the money ran out on this program in California.
Who do you think's gonna win this battle, Elon Musk or Gavin Newsom? I don't know about you guys, but my money is squarely on Elon Musk. It is also being reported today that refreshed Tesla Model Y Juniper may hit markets ahead of schedule, a new report suggests. Tesla's Shanghai Gigafactory is allegedly preparing to launch the updated Model Y codenamed Juniper, with production lines currently shared between the existing Model Y and the new variant. The Juniper model occupies a smaller portion of the production capacity, which points towards a strategic ramp up towards its anticipated release in January of 2025, instead of the previously scheduled March 2025 release. Option activity today, for the first time in a long time, is actually not more positive than negative. It's actually more negative than positive today, at least so far on the trading day. You have 86 different trades from hedge funds and institutions totaling $44 million with a positive order value of 44%. In recent weeks, we have seen this positive order value number being 85 to 99% positive on any given day. So today's kind of a standout in that regard. Now, if we take a look at the short interest of free float, you have 2.73% short interest of free float. $25.76 billion sold short in Tesla currently, totaling 76.16 million shares. Now, we have some good news here as well. If you look at the short activity today, you have return shares of 1.28 million, borrowed shares of 842,000. That means on net, you have 435,000 shares that are being covered on today. That's a good sign when short sellers are covering on red days. Think about it like this. If you're a short seller and you short a stock, let's say you shorted Tesla and you're a short seller and you were bearish on the stock and you were losing money and the stock was going up and you're like, what the heck is going on? Why am I losing money? Why is the stock not falling? Right? You've done all your due diligence, all of that. But now imagine the situation changes. Trump becomes president. You have a more fast track approach to robo-taxis. You have Juniper coming out soon. You have the new, Megapack factory that's going to be done in the near future. You have so many different things going for Tesla now, and perhaps you're a short seller, and now you're a little bit more positive on the stock. Now you're like, hey, the stock can probably rally. I don't want to be short anymore. You're going to start covering on those red days when you get them. And that is what is happening. So that is actually a sign that hedge funds and institutions are gaining more positive confidence behind Tesla. The fact that they are covering on short positions as the stock is red. We've seen this the last couple of red days where shorts have started to cover. Now, we do have some news today. This says here the U.S. is suffering from a deep shortage of homes, and it's driving sky-high home prices and rents per BI, but U.S. MBA mortgage applications week over week come in at 6.3% versus 1.7% in the prior week over week period. So mortgage applications actually surged is the headline. U.S. MBA 30-year mortgage rate fell to 6.86% versus 6.90% previously. Today we did have PCE that came out at 10 o'clock in the morning. Your headline came in month over month at 0.2%. That was the same as expectations. Core PCE month over month came in at 0.3%. Expectations were 0.3%. But as I say all the time, this does not come in at an actual round number decimal point, okay? It comes in at, 0 point something, right? Not just 0.3. It was actually 0.27% in October, 3.3% annualized, the largest month over month increase since March. But the expectation was from forecasters and major banks that you would actually get core PCE month over month of 0.28%. So this came in 1 point lower than expected. Now, did that cause markets to be overly optimistic? Not really, but it did come in slightly, very slightly lower than expected. Now, the 12-month rate rose to 2.8% from 2.7% in September. That's not exactly great, and 3.4% 1 year ago. The 6-month annualized rate held at 2.3%, and the 3-month rate was 2.8% versus 2.4% in September. So you do have some of these inflation numbers starting to kind of ramp higher again, although I think this is temporary, and you will see inflation actually fall as we get into the Trump presidency. Durable goods orders came in a lot lower than expected. U.S. durable goods orders for October came in at positive 0.2% month over month. Consensus was positive 0.5% month over month. So that's not a great sign for the economy. And that's part of the reason why 10-year Treasury yields are actually falling today. About 6.5 basis points down to 4.24%. GDP growth rate quarter over quarter, second estimate for Q3 came in line with expectations at 2.8% versus 3% the last rating, but that was exactly in line with expectations. Initial jobless claims came in lower than expected at 213,000. The expectation was 216,000, so continuing to beat there. Personal income month over month came in at 0.6% versus expectations of 0.3%, so that came in a lot better than expected. And personal spending month over month came in slightly better than expected as well. You were expecting 0.3% month over month, and you actually came in at 0.4%. So that's a good sign for the economy. Now, Chicago PMIs came in at 40.2. The expectation was 44. So Chicago PMIs actually weakened quite a bit. Overall, it was a lot of mixed data today with a slight downwards tilt because of the miss in durable goods orders, the miss in Chicago PMI, the higher personal income, and the pretty much in line personal spending numbers. Mixed that with a PCE report that just didn't go lower. We were hoping that that would come in lower than expected. It didn't happen. So I would say the data today is quite mixed, but definitely, wow, can I not speak? Leaning more negative. Now, you really are seeing a weird market today. The NASDAQ down 0.88%, almost 1%. The Russell 2000 is up almost a third of 1%, largely driven by the fall in your treasury yields today. The Dow is slightly positive today because people are expecting, better economic growth and activity. So you're really just seeing a sell-off in big tech today, and that's spreading to other stocks in different, sectors. Specifically, Nvidia is down 3%. That is definitely not helping things at all. Netflix is down quite a bit today as well. Microsoft down 1%, Meta's down 1%, Amazon's down 1%, Apple's down 0.2%. And unfortunately, for the indexers, I think this is going to continue. Now, it's not going to just continue at a constant pace, right? But I think in 2025, you're going to see big tech underperform. You're going to see small caps and interest rate sensitive names and mid caps outperform, especially if 10-year treasury yields, as I've talked about before, do start a downwards trend. 10-year treasury yields tend to trend in one direction or the other. And ever since November 21st, you've started to see 10-year treasury yields fall. If this continues, it's really going to lead to underperformance of big tech and outperformance of small, mid caps, and cyclicals. Now, eventually that will benefit Tesla. But about 80% of the trading volumes that you see on any given day are algorithms. So what's happening? Big tech's getting sold off. Tesla got sold off because of the algorithms selling off other big tech names. I don't think that is something that will continue. I think that's more of a today occurrence. And I would expect Tesla will start to react more to Tesla specific news than to trade alongside big tech. Because Tesla should really trade more like a small cap company, a cyclical company that's very, what could be vulnerable to economic data. If the economy's well, Tesla should do well, right? If the economy weakens, Tesla should do poorly. But also interest rates, because Tesla's buying down interest rates. About 80% of new vehicles are financed. As rates fall, that's going to boost Tesla's profitability in basically a lockstep nature because Tesla's buying down the interest rate currently. So today, it's costing a little bit less money for Tesla to buy down the interest rate. Okay? I do not think this is starting a downwards trend for Tesla, even if big tech does continue to sell off. And Nvidia is really the biggest drag on the headline S&P these days. Nvidia is now down 3% for 2 days in a row. And this is why I say all the time here on this channel, I'm really not super excited for the headline S&P. I think next year is going to be a stock picker's market, and I think small, mid cap, and cyclicals are going to outperform if we avoid a recession. I also believe inflation is going to come down faster than expected, and that will allow the Fed to cut rates more than the markets are currently expecting, which also benefits small, mid cap, cyclicals and Tesla specifically. So let me know what you think about this information down below in the comment section. Have a fantastic rest of your day. If you guys want to come trade with us as well, live in real time, every time I make trades, check out that link down below in the description of this video. You guys have a safe rest of your day. Happy Thanksgiving, and I will see you in the next one.